Alright, so the stock market's dropping, and everyone's freaking out. Trump just slapped a 50% tariff on Canadian steel and aluminum, and now Canada's threatening to hit us back with its own tariffs. Guys, investors are panicking, stocks are diving, and people are wondering if this is gonna turn out into a full-blown trade war. But guys, while everyone else is running for the exits, I'm buying. Now, in case you're new around here, my name's Nima and welcome to the channel. I'm a corporate executive with over 15 years of experience in both sales and finance. My videos break down complex financial concepts to help you on your financial journey, whether you're just starting out or if you're already a seasoned pro. So guys, let's jump into today's topic, which is the stock market is crashing because of Trump's tariffs. Here's why I'm buying. So guys, look, when the market crashes, it feels like you're watching your money disappear. Whether it's in your 401k or your portfolio, it really doesn't matter. It just looks like it's dwindling. One day your portfolio's looking solid, and then the next day it's down 10, 15, maybe even 20%. And I get it, nobody likes losing money. But the reality is, this is exactly when the best investors step in. Crashes create some of the biggest opportunities to build wealth, if you know what you're looking for. So guys, first, let's break down what's actually happening. The market is dropping because of uncertainty. Trump's tariffs don't just affect steel companies, they ripple through the entire economy. When steel and aluminum get more expensive, car manufacturers suffer, construction companies suffer, and appliance makers all take a hit. That means what? That means higher costs, lower profits, and in some cases, higher prices for consumers. Investors see that and they panic sell, which drags the entire market down. But here's the thing. This isn't the first time that tariffs have caused a sell-off, and it won't be the last either. Back in 2018, when Trump started his trade war with China, the market had dipped fairly hard. People thought it was the beginning of a major collapse. But guess what? The market bounced back stronger than ever. Because at the end of the day, the US economy is resilient. Strong companies adapt, trade wars eventually cool down, and investors who stay in the game come out ahead. And guys, let's be real. If you like the stock at $100, why wouldn't you like it at $70? People love discounts, especially when they're shopping. But when the stock market's on sale, they tend to panic and run away. And to be honest with you guys, I get the feeling, but in reality, it doesn't really make sense. The biggest wealth building opportunities happen when great companies get dragged down for no reason other than fear. And if you can stay calm when everyone else is panicking, you can make some of the best investments of your life. Now guys, I'm going to throw a caveat out there. I'm not saying just buy any random stock that's down. Some companies are dropping for good reason. If a business is failing, drowning in debt, or losing customers, then yeah, maybe it deserves to be down. But strong companies? Those are the ones with solid revenue, long-term growth potential, and a competitive edge, right? And exactly that, those are the ones that I'm buying. So, let's talk about what actually makes sense to buy right now, in my opinion. Since tariffs are the big issue, then companies that don't rely heavily on foreign trade will be in a much better position. So, you might be wondering, well, Nima, what's one sector that fits that? Easy. Big tech. Companies like Apple, Microsoft, Google, they're all getting hit in the short term, but they have strong balance sheets, global dominance, and businesses that can weather the economic downturns. Honestly, all of these companies have been through worse, and they always tend to bounce back. Let's add another category that I'm looking at: household brands. These are companies that sell products that people buy no matter what's happening in the economy. Just think about it. Coca-Cola, Procter & Gamble, Johnson & Johnson. Whether we're in a trade war, a recession, or a full-blown crisis, people still buy food, shampoo, and medicine. That's why these stocks tend to be safer during downturns. And also, I'm looking at dividend stocks too. When the market's volatile, it helps to own stocks that actually pay you to hold them. Companies like Pepsi, Verizon, McDonald's, they all have strong dividend histories, meaning that they pay you cash every quarter just for owning their shares. That way, even if the stock price actually drops, you're still making money. But guys, before I dive into more of the stocks that I plan on investing into, if you're gaining value from this video, I'd really appreciate it if you could smash that like button, leave a comment down below, and subscribe. Your support helps this channel grow, so please show some love by smashing that like button, commenting down below, and subscribing. Alright, so back to the stocks that I think would make sense to invest into. I'm also considering industries that benefit from higher interest rates. With the Fed trying to control inflation, rates have been rising, which helps banks and financial companies. That's why I'm looking at organizations like JP Morgan Chase and Bank of America. Higher interest rates means that they can charge more on loans, which boosts profits. Additionally, you can even go into more things like utilities and energy stocks. They tend to do well in uncertain times. People always need electricity, water, gas, no matter what's happening in the market. Companies like Duke Energy and Next Era Energy, they pay solid dividends and tend to hold up better in rougher markets. And I'll share another strategy with you. That would be investing in index funds. Guys, if you don't want to pick individual stocks, just buy the S&P 500, otherwise known as SPY, or the Total Stock Market Index, otherwise known as VTI. These funds give you exposure to the entire market, and historically, they always bounce back. Especially if you're investing long term, you're almost guaranteed to make money over time with these options. And on top of all of these gems that I've provided, I would say the last thing that I'm looking into, especially if you're like me and you like to invest in the long term, is first understanding that these crashes actually work in your favor. If you're buying stocks every month, you're now getting more shares for the same amount of money. That's the power of dollar cost averaging. Instead of trying to time the bottom, you're just buying consistently and lowering your average cost over time. So when the market does recover, your gains are even bigger. And guys, let's not forget about history. Every major market drop, the 2008 financial crisis, the 2020 COVID crash, even the dot-com bubble, people thought it was the end of the world. But fast forward a few years, and the market not only recovered, but it hit all new time highs. And of course, the people who stayed in and kept buying made a killing. On the other hand, the people who sold out, well, they locked in their losses and missed the comeback. The biggest mistake people make in a crash is letting fear control their decisions. It's like a gambler who lets their emotions get involved while they're gambling. They tend to fail or fold. And guys, panic selling feels like you're doing something smart in the moment, but all you're really doing is just guaranteeing that you lose money in the long run. The key is to think long term. If you believe in these companies that you're investing in, the short-term dips shouldn't scare you. So yeah, the stock market is crashing because of Trump's tariffs, but I'm not panicking. I'm buying. Because history has shown us that the best opportunities come when fear is at its highest, that's the time to jump in. And when everyone else is running away, that's when you should be telling yourself, hey, right now's the moment. So guys, if you're investing right now, don't let the headlines scare you. Look for strong companies like I've mentioned in this video, think long term, and take advantage of the discounts while they last. Because when the market recovers, and it always does, you'll be glad that you listened. And that pretty much sums up this video. Guys, if you'd like to share what stocks you're looking at right now, please go ahead and put them down in the comments below so we can share it with our community and help all of us benefit. I really appreciate you watching this video all the way through. Please like, comment, and subscribe. And guys, I'll see you in the next video.